Ladies and gentlemen, today was a pretty big day in the stock market. We've used this image before, but never has it felt so true. The entire global economy relied upon Nvidia's recent earnings announcement, Q3 earnings 2025. And everything was riding on the muscular shoulders of Nvidia and its CEO, Jensen Huang, who has become one of the most important people in the world, one of the leaders of this AI capex boom that is fueling our economic growth. One of the guys behind all the other companies that are pushing into this AI realm. And so was Jensen going to hold firm, or was he going to shrug and the world tumble around with him? People had an expectation, a split outcome. The market was highly divided going into these earnings. And it was either Nvidia beats on earnings, aka has good earnings, and the markets rally and the stock market is saved, or Nvidia misses earnings and the markets tank and the AI bubble pops and Bitcoin goes to zero. These were the only two options, it was sort of thought. And so all eyes were watching as they went on the earnings call and announced what was happening. Leading into this moment, Nvidia stock was actually down about 8 to 10% over the month of November, as with a lot of other tech stocks, because there's been a huge rise in interest in an AI bubble. There's been a bubble of AI bubble content, actually. On YouTube, you see tons of videos all about it, articles all about it. Google web searches had peaked for AI bubble just recently. Everyone's been talking about this AI bubble, and there was a lot of nervousness and trepidation in the market, and they really needed something to come in and calm them down. Well, they found that guy, because Jensen Huang showed up for the earnings call and basically did this.
I'm not leaving. I'm not leaving. I'm not fucking leaving. The show goes on.
The show goes on, he said. He basically said, this is their opening line. The opening line of Jensen Huang for this earnings call was, a lot of people are talking about an AI bubble. We don't see that. We see something very different. And then he proceeded to announce a bubble in selling GPUs for money. Just to being honest, they had an incredible quarterly revenue report. All-time high revenues by a lot. They were selling an absolute fuck ton of the metaphorical shovels of the AI gold rush. $57 billion in revenue. Massive, massive jump. They beat on all expectations and generally sent a positive message to the market. People haven't been this excited about Nvidia's earnings since they announced the Nvidia broadcast app. They haven't been this hot since since a certain marketer announced the Nvidia broadcast app, okay? Things are looking pretty good at Nvidia in this earnings call. And the response from most outlets was extremely positive.
Nvidia's results today kind of showed that Nvidia can still grow. It's still doing very well. It still has improving prospects. And so that's really setting people's minds at ease around the state of the trade.
And that was the general consensus before what happened today. From the earnings last night to what happened today, the general consensus was, hey, things are good. We're not fucking leaving. The party goes on. Nvidia has crushed earnings. The AI bubble anxiety was shrugged off with bumper chip demand faster than Wall Street anticipated. And a lot of people not only were praising Nvidia, but making fun of a certain man. We've talked about him recently, Michael Burry. Michael Burry was getting fucking roasted. Now, again, I think he had a longer term play than this, but one of his announced positions was an Nvidia short. And so you could see all over social media, live look at Michael Burry, sad bear, sad bear, sad bear. Michael Burry right now, freaking out. Being early isn't wrong, quote of Michael Burry. Frustrating and seething, okay? Pretty much they were pissed off at him. But I wanted to mention something. Well, let's break down a little bit what happened, but first set the stage. So it is a little strange, in my estimation, to focus on Michael Burry's side, Nvidia as like a ground zero of if you were not so confident on AI. Because Nvidia, by all estimations, is the shovel seller. Do you know what I'm saying? In a gold rush, the real thing you got to worry about is whether these guys can make money, not this guy. This guy's going to make money until these guys stop buying. Nvidia, at the end of the day, is just proving that there's still a market for shovels, not that they will dig and find gold. So that was the estimation. But if you look at this chart of all the web of connections in AI, I said something in a video recently. This is the Nvidia OpenAI Oracle one. Here's the more like .com bubble take. The .com bubble take is that this triangle will break once one of these three cannot make their payments. And I'm pointing to the one I think is most likely. So in this video, I did an optimistic and a pessimistic take, but my pessimistic take was focusing on, I don't think the weakness here is going to come from Nvidia. Nvidia's going to keep making infinite money until some of the buyers break. And the one that seems most risky is OpenAI. And so I'm moving the circle from here to here. And Michael Burry, in response to these earnings, actually had a similar take. He said, one more, OpenAI is the linchpin here. Can anyone name their auditor? Interesting question. Can anyone name their auditor? And that is actually, I didn't know this, it is an interesting question. The Financial Times had a similar article just come out saying, who is OpenAI's auditor? An auditor, if you don't know, would be the independent third-party firm that checks your books. Okay, that verifies all your books to make sure everything's above board, that you're counting revenue appropriately, counting profit, everything, your balance sheet's all appropriate, everything stacks up. And the question was, who's OpenAI's auditor? Just asking. And it turns out it's pretty hard to find out because they're a private company. But a little bit of digging turned up a Fontanello, Duffield, and Otaki LLP, a small, very not well-known San Francisco-based bookkeeping firm. This is their website. I'm not kidding. This is their website for the auditor of a company that it would be if it were public, would be a top 20 company worldwide. Pretty shocking. And when they looked into it more, this is ironic and doesn't mean anything on its own. It's not a major deal, but it's kind of funny. This is the company that also did the books for Cisco during the dot-com bubble, which is actually fucking crazy. So a little reminder on Cisco and the dot-com bubble. Cisco, obviously still a great company and has over 20 years gotten back to the valuation it had at the height of the dot-com bubble, but it did peak a little early. Again, Cisco, it's often used as an analog for Nvidia, even though there are key differences, and Nvidia does make more real profit than Cisco did, but because Cisco was selling the shovels of the internet gold rush. In the era of the internet dot-com boom, where everyone was trying to make money on the internet before it was fully developed, Cisco sold the chips and switches that was going to be the groundwork of the of the internet revolution. So they were the shovel sellers of that time. And when that demand popped, their stock took a correction. So there is parallels to be had. And the interesting thing is that when people looked at some of the things that were in the Nvidia earnings report, it had some similarities. Now, obviously on a high level, the Nvidia earnings report was incredible. Revenue off the charts. They still had great margins. They made a ton of money. But there were some interesting tidbits. This right here is a balance sheet from Cisco Systems in 1999, right before this popped, right here. Normally, if you look at this, you can't really see any red flags. I'm not going to bore you with accounting details, but none of this looks bad. It looks like it's a great company. But in hindsight, there are a few things that can be pointed out as like, oh, that was an interesting indicator. And the two that I'm going to focus on are inventories and accounts receivable. In the years leading up to 1999, those two numbers started to balloon. They started to have way more inventories and way more accounts receivable. Now, accounts receivable is money that has been pledged to you but not paid yet. You've sold something to someone, but they haven't paid you yet. Okay, accounts receivable is that. And then inventories is amount of unsold product on your books. So invoice but not paid, basically. You've bought something, you've sent them the invoice, the bill, they haven't paid it yet. And those two things, before the crash in Cisco, were both rising dramatically. So if you look at Nvidia for this recent earnings report, you start to notice some similar things. Accounts receivable is rising dramatically. Inventories is rising dramatically. If you want to see it visually, this is Nvidia accounts receivable. Okay? This is unpaid bills. Now, obviously, they're dealing with very rich companies who should be able to pay these things, but there's build out over time for these big data centers. And if you ask Nvidia, they would say these are very likely to get paid and things are, but it is a sign if things were to break, this would be where some of the risk is from. This is Nvidia inventories. Again, more products building up. This could be a sign of what you call channel stuffing. Now, I'm not 100% saying this. I'm just saying that these are the reasons some people are nervous when they look at these balance sheet or this earnings report. And again, similar quotes. So in this earnings report, Jensen Huang saying Blackwell sales are off the charts. Cloud GPUs are sold out. We're in the virtuous cycle of AI. The ecosystem is scaling fast. And in 2000, Cisco saying, we see no indication the radical internet business transformation is slowing. We believe it's accelerating globally. What I'm just saying is that if you were a skeptic, there are still plenty of signs that make you nervous in this earnings report, even if the top line numbers are fantastic. So it didn't quite assuage all the fears, even though in this environment, they are still doing, I cannot stress it enough, extraordinarily well. Nvidia has turned from a relatively small gaming GPU company to one of the most profitable companies in human history in a very short period of time. It's like unheard of. They are now making billions and billions of dollars in cash, okay, with a huge profit margin in a way that's like kind of crazy. You have to give them their flowers. But again, there are things that would make you tilt your head a little bit and go, huh. I'll give another example. In this recent earnings report, they revealed that their concentrated list of customers that you see here is really concentrated. In fact, they said 61% of all their revenue, that's the 50 plus billion, came from just 4 customers: a mysterious customer A, customer B, customer C, and customer D. Now, I don't know who these people are, but if I was at the White House inauguration in November of last year, I might label them like this. If I had to guess, again, it's possible that this is not, and it's Oracle, but like we're around this area of, a few people, especially because I don't have this in the slides, but let's pull it up. Give me 1 second. So watch this clip and listen to how Jensen Huang gets a little bit nervous with how cavalier Elon Musk is.
To talk about here today. Let's begin with you, Elon, the things that we're doing with XAI.
Yeah, we're excited to announce that we're doing a 500 megawatt. 500 megawatt. 500 megawatt, yeah.
We're doing 500. We're doing 500 megawatts.
Sorry,
Not
this.
Quite, yeah.
No, it's 500 gigawatt one. I'll have to wait. That'll be $8 bazillion trillion.
Stop that. Who cares? Megawatt, gigawatt, it'll be a gazillion trillion dollars. Like, he's throwing around numbers as if he doesn't fucking care. As this, it's all worth it to make Grok glaze me, okay? And this is right before Nvidia's earnings. And Jensen Huang is a little more like, hey, calm down. Let's not make this seem like something that's not serious. Like we're just making up gigantic numbers. Let's make this seem very concrete and real. Like it's really real money that's going to get paid. And so, if Elon is one of the 4 customers here, which I believe he is, it's just a sign of like a bit of cavalierness about how big these numbers have gotten. And these numbers need to be actually real and actually paid to make Nvidia good on what they're promising. Additionally, another interesting data that came out is that these big AI companies that make up 61% of the revenue, people used to say, well, these companies are fucking rich. They can afford to throw a lot of money at this. And that's of course true, they can. However, this year, specifically in the last half of this year, they have switched from using their own free cash flow to borrowing money. Bond issuance is when you borrow money. So Alphabet, Amazon, Meta, Microsoft, Oracle have all started borrowing money to buy these GPUs instead of just using their own, again, monopoly profits to buy it. So it adds another layer of risk, another layer of downside risk, because the money that borrowed comes with interest expense. So now it adds more, the leverage adds more risk to it. All of the, I have to stress this because I'm not saying I know one way or another. All of this can be above board. These companies are wealthy. Nvidia is making money. The chips do have demand. All of this can be above board, but there are things in this that imply more risk than the all is good narrative would have you believe. Because of that,
while this report certainly is being received well in the markets, I don't think it calms all of the concerns around AI in general. None of the stuff that people have raised as issues with the AI boom has gone away.
So that was the idea. The idea was, listen, this actually didn't answer any of our questions. Like we all kind of figured that Nvidia could sell chips while the thing is going. It hasn't really proven that the chips can be used profitably by those buying them. But the narrative being pushed was, okay, Nvidia's done well, so it's all good. Everything's green, the story's back on track. And that's how it looked all day. The markets were back, bro. Jensen Huang had saved the economy was like a headline you'd see. And then right around 10:30 in the morning, something happened. Something happened. What the hell? Now, part of this is, of course, all of the fears we just talked about. People dug into the report more and said, well, this isn't fully put my mind at ease. And so Michael Burry said, call the ambulance, but not for me, as his Nvidia and Palantir puts actually made a ton of money today. Assuming he sold out, I probably don't think he did, but. And we actually got the weirdest outcome, which is that Nvidia did beat earnings, but markets did not rally. They went down. The AI bubble didn't pop, but the story's still not intact. And Bitcoin, while not going to zero, did tank. Bitcoin continues a massive 20% slide in the past month, dropping under 87K. The level of vitriol on crypto subreddits is crazy right now. There's so much going into this that I don't want to point it on any one thing. Part of it is people still having skepticism on the AI hype. They're starting to de-risk a bit at certain levels. And again, it's the things we talked about here. Part of it, and I don't want to go too deeply into this, is that Japan's 10-year treasury, this is the borrowing cost in Japan, continues to rise to like fucking decade-long highs. Now, when Japan's borrowing cost is high, I'm not going to go into it too deeply, we did on the podcast, it unwinds a thing called the yen carry trade, where people borrow money in Japan and then use it to speculate on things in America. The yen carry trade is a huge underpinning of a lot of stock market frothiness. People borrow billions in Japan and they punt it on Nvidia and S&P 500 and a lot of things, okay? So as the borrowing cost goes up in Japan, it kind of unwinds that carry trade, which is like slowing down the ability of the stock market to be so frothy. Finally, is that the general fear and greed index, despite the stock market only being a tiny bit down, has hit extreme fear. People are just extra pessimistic right now. Now, this is actually fucking crazy when you think about it, because this is where we're at. This is like October, where basically, it's down 8% or whatever, but it's like where it was in October. And you see people freaking out. People are in extreme fear. It's not freak the fuck out and sell everything Warren Buffett meme just yet. But they just feel a nervousness in the market. And I noticed this on like investing subreddits where they said, what's going on today with the market crash? Again, it was down like 2% today overall. I mean, it was up quite a bit and then went down, so the swing was massive. I don't want to downplay the level of swing we had today. Nvidia stock swung $400 billion today, which is like, again, 4 Nikes or whatever. That's insane. It was a big swing. I think this is actually the swingiest day since the tariff announcement in April, but it's not a crash, Calling it a market crash is pretty crazy. And I'm just worried if the type of people on these subreddits think this was a crash, how are they gonna what kind of fear are they gonna have if we had like a 10% correction? Do you know what I'm saying? Like if we actually had it's insane that the people are freaking out over 2% drops. So this, at the end of the day, was the stock market. Everything was red. Nvidia down 2, Apple down, all big 7, Max 7 was down, everyone was down, except for one company. Google, in the past few days, released their new Gemini 3 Pro model that actually crushed a lot of AI benchmarks, is sold at a lower cost than ChatGPT, and crazily enough, was trained entirely on their own TPUs, which means not NVIDIA GPUs. Google's own internal tensor processing units, TPUs in-house, trained the entire model, which means, even though Google does buy a ton of NVIDIA GPUs, means they are building, in the long term, a way outside of NVIDIA's monopoly that doesn't require them to pay those massive margins to Jensen Huang. So all these things were interesting. There's definitely like a story here. And it's worth saying, of all the Mag 7 stocks this year, the best performing by far has been Google. Google's been crushing all the rest. And I think it's because there's starting to be a new narrative emerging, which is that, oh, wait a minute. We all thought OpenAI and Microsoft were guaranteed going to win this thing. And people were saying, wait, Google was slow and shitty out of the gate, but they are slowly catching up. They have actual money to spend on it, unlike OpenAI. And they have more data than anyone else. AI is becoming more and more a data game. And who owns YouTube, the greatest source of AI data ever? Google does. Who owns, internet search and advertising? And it's Google. So they have more data for more revenue adjacent areas than anyone else. So the story this year has been actually that if there's a possible winner, if it's not a bubble, Maybe they're all losers. It seems more like Google than perhaps Microsoft and OpenAI. And also, additionally, crazy timing, right in the past few days, maybe his last fucking act, Warren Buffett made a gigantic $4 billion bet on Google. Again, the guy's probably going to die within a year or two. And Berkshire Hathaway made a gigantic bet on Google. And again, for the mobile revolution, Warren Buffett made a massive bet on Apple that paid off handsomely. For Chinese EVs, they made a massive bet on BYD that's paid off handsomely. They've been pretty good at, like, once the winds blow a certain way, they make a big bet kind of early on. And so there's a real chance that this has been like a surprise trend that Gemini 3 might have an advantage. We'll wait to be seen. Now, I will say, if we're going to do any per Atriox, I'd like to flash back to Pack 1, Pick 1 of the January stock market competition. For my first pick, I will take...
You can't stall on your first pick.
No, I can't, actually. I can if I have a minute. I'm going to go to my whiteboard camera with my safe stocks.
No.
And I'm going to flip it over to the real ones. Oh, shit. I fucking fell.
What is going on over there? I don't.
And I'm going to open with an easy one, okay? Google. Dude, pick me. Which means... as of today, after, 6 months of the fucking depths, we're back, baby! We're back on top of the Doug stock draft competition! A rank 1! Despite Aiden and Stan's both hitting 200% plus outliers, I have nothing like that. We have managed to moneyball our way to 31%. Back on top, right at the buzzer. I mean, well, there's still plenty left to go. Who knows how it's going to shake out? But as long as the market's in fear, I'm doing good. When everyone's positive, I go to the fucking 4th place ahead of Lud. When everyone's afraid, I do well. So I just need to FUD. And that is sort of the update on what happened today in markets. It was a pretty fucking crazy day, I will say. And nobody knows how this is all going to shake out. But I am excited to keep watching and covering it with you. Thanks for watching.